Well, what can I say? Another day of winning. You know, it's another day, another dollar. I think I might buy a Lambo. Yeah, I'll just take this money and buy a Lambo. Oh, I feel good. You know, I feel relieved that I just keep winning. I haven't even lost ever. Like, to be honest with you, I've never really lost, because even a loss is a win, right? This is how I was born. We were born to win, right? And if you didn't catch on by now, I'm being facetious. And yes, I lost today. Okay. All right. There you go. There you go. Right. You got fooled. April Fool's Day. I traded like crap today. There was a bunch of things that I did wrong. And I will be honest with you when I say that I kind of feel like an amateur. I took a news trade. Basically, I took a trade right before news, and I know better than that. So that was kind of like a nasty little mistake right here. This is what you're seeing on the chart. Let me back up. My name's Mike. I've been trading for 8 years, 4 years profitable. And today, April Fool's Day, I dropped an album about trading. So if you want to check that out, the link is in the description. I don't know. And that's not an April Fool's joke. I really did drop an album on April Fool's Day. So it's kind of funny. But yeah, let me go back to full screen real quick. So I've been trading 8 years, 4 years profitable, and I've been showing people in my community. All right, I said, yeah, this is my community on school. And it's just been bananas. Like, of course, today, a lot of us took L's. And like I said in the beginning of the video, a loss is a win because you should be learning from your losses. And I agree with that. I mean, I don't think anybody can disagree with that, right? But this community is amazing. I actually walked everyone through sort of what I'm about to show you here. But I did a live the last 4 weekends in a row with the Crazy Horse Orb strategy. It's just bananas. And I mean, we got people in here who did win. A shout out to Jose, who actually did the flip today. I teach about what this is. And so the strategy that I'm about to show you is called the Orb Crazy Horse strategy. And you can just see, like, if I go to wins, it's constant, man. Like I mean, people are coming in here, what is this, 4 days ago, and they're just posting up, like, since they've been in the group, 100% win rate. Like, and it doesn't stop there. We've had some other people. Andy, shout out to Andy for posting his, P&L since he's been in the group, and passing prop firm challenges and all sorts of stuff. And there's 522 pages of wins. Go on with the wins, but I think the most important thing, especially on a day like today where we lost, most of us, I would say, probably lost if you were trading what I'm about to show you, but we probably could have done a better job. And that's why I wanted to show you the chart, because I learned that, first of all, I learned that attention while I'm on live stream, because today was the first time that I missed the news event. I didn't know that news was dropping. I was talking about this new album that I released, and so that's important. Second thing that you'll notice here is another trade down at the bottom. And what you'll see here is these bands. It's called TMT Crazy Horse bands. This is a custom indicator that we're using inside of my group. If you want to see that free training and everything, you can link in the description, and it's free. You come in, I'll show you exactly what we're doing. It's really, really simple. We have a 15-minute opening range, and when price closes a candle body outside the range, hence right here why I went long, we're clear to take a trade in the direction of the break. And we want to wait until that candle body officially closes, right? So down here, this is why I took this short right here. And as price went back up and disrespected the range, closing a candle body outside the range, we were actually good to take a long. Now, I did not take this position, and that was my mistake. I should have just flipped. I teach, like, this is the flip day. And we get that extra vote of confidence after the 6 candle rule. Some people might know what this is. If you in the community, if you don't know what that is, it's a momentum, right? 6 candles in one direction with candles looking a particular way. We'll just put it to you like that, okay? So when they look like this is really good. This means probably continuation, even if we have a pullback 50% of the move, which in this case, you do have a pullback a little bit more than 50% of the move, and then you get continuation. But the last mistake that I made today was that I did not take this trade at either break even, or if I was using the shelf method, which is something I show you guys. This is something a lot of, professional traders use to trail price, called the shelf method. And this would have been roughly where I would have taken my trade profit on this trade, because I do not have take profit levels, right? And so just to kind of show you like the power of this strategy and how simple it is, we'll just go to a random bar, right? And I'll just show you like how easy it is. And that way you can kind of, get a feel for it and everything. So we'll play price out to 15, whoops. We go to the 15-minute time frame, and we'll get to the New York session. So we need to get to the New York session. Now, I have heard that this can work on other sessions. In fact, a little birdie told me that on something, but we got to test before I fully roll it out. So we're doing that inside of my group. But it is. We're waiting for the 8:30 candle Central Time. That's 9:30 Eastern Standard Time. 9:30 a.m. Okay, for you traders out there, 9:30 Eastern Standard Time. You know, traders use the Eastern Standard Time. Somebody yelled at me online because I use my Central Time zone, and I was like, "Whoops!" I'm just so used to seeing the Central times. But anyway, 9:30 Eastern Standard Time, 15-minute range right there. Okay, this is the 15-minute range of the first open, the New York Open, like the first 15 minutes of the open. We're waiting for a 5-minute candle body to break. There it is. We're clear to take a trade to the downside. We're going to go ahead and take that. How do I know, where my stop loss needs to be? In fact, I would zoom out a little bit. This would be the trade setup right here. We're going to use 25 points. It's automated. You can see the A over here, auto fills data, right? If I zoom out, I look at about 100 candles. Let me see how many candles this is. This is about 136 candles deep. That's going to show me the overnight session. That's going to show me the relative volume that basically my view. What's the volume in my field of view, right? So this is going to be dynamic. If I zoom way out and I put a short, you can see it increases the stop loss. So based on this range, this is about where I trust this. This is what I back test, what I forward test. This is why we've only had 2 red days in 2025. So I am very confident with this level. Now, another thing that we teach and that I show you is dynamic money management. What does that mean? That means this stop loss level that normal traders would look at and say, what? You got wicked out. Well, that is why most traders lose, right? Because your stop loss gets hit. So one of the things that I've introduced, and this is something my mentor taught me, was dynamic stops. So what this means is you basically set this up like this. This is going to be a unit of risk. So what is your unit of risk? What is it going to be? You decide. It could be 1%. It could be 5%. It could be 0.5%. I like to risk anywhere from 0.3 to like 3% on average, right? Especially if I'm going to add to positions, I'll lessen my risk. So in this case, a dynamic would mean that I don't really get out right here. I can let price go to my invalidation zone, which is going to be the opposite side of this range. That would be the invalidation zone. If price closes a candle body, which yes, I wait for candle bodies to close. Somebody's like, so you're telling me that you're going to wait for a candle body to close? Yes, bro. That is part of the strategy. Yes, I wait for candle bodies to close. And guess what? I have an incredible win rate with an incredible P&L to show it. And I do it live Monday through Friday. So if you want to come and watch me, you can. This is my invalidation zone. I'm out of the trade if price reaches that zone, right? Let's play it out. I can add to my position at the middle line. If a candle body closes above this middle line and it looks good, I can add to it. In this case, I'm not going to do that. Let's just see what happens. Does this get invalidated? So you see how that closes right above the candle line, but we don't invalidate structure at all, and we don't invalidate the 15-minute range. So it's up to me to determine whether or not I want to add to this position or leave it. In this case, I'm going to leave it because we're close to the opposite of the spectrum. I don't have to close until candle body closes outside the range. So right there, that's pretty convincing, but we're at the upper band. I want to go even further. I know this sounds crazy, but I'm going to wait and see if price closes outside of that band. I know it's crazy. I know. You're just hopium, Mike. You're hoping it comes back down. Okay, well, once again, you can think what you want, but I'm showing it daily, man. I don't know what to tell you. So right here, this is an opportunity for me to do what's called a flip. Now I believe price. I'm going to play one more candle out because I think this could go through it. I want to see price break that structure right over to the left. I want to see it break this, but it looks like it's not going to. So in this case, no bottom wick. I'm going to hold one more. A little bit of candle theory right there. No bottom wick. I'm going to hold one more. And now I believe it. So check this out. I got the rest of the day to flip. I can flip, or I could add to my position. In this case, I'm going to go ahead and flip. I would close this down. We'll do the math in just a sec, right? Ready? So this is 25 points. This is, what is this? 56 points. That's 2%. So think about it. 2%. A lot of you guys are looking at the distance and you're going, wait, you're holding this 70 or 150 points, 200 points. Bro, it doesn't matter. The distance does not matter. All that matters is that you did the math and you're an adult and not an immature kid. So you did the math and you said, I don't want to lose more than X% on my account. So here is my sizing. That's all that matters, okay? So hopefully that makes sense. Does that make sense? Drop me a comment. Let me know. Does that make sense? Now look, here we go. Ready? Playing this out. let's see if the win outweighed the loss. Ready? Now, I would be trailing at this point. So this is price pulling back. I'd be trailing right in the middle of that consolidation right there. This is called the shelf method if you don't know it. Letting price pull away, letting it breathe. This is what I teach. The shelf would be right here, and I would have been out after that touch point right there. I would have been out. So this is about where I would have been out, 1.6. So 1.6, now check it out. We have the rest of the day. We might even be able to get another trade in if price presents a good opportunity, which it looks like it might. So what we teach is if the candle body closes underneath the center line, we're clear to go ahead and enter another trade based on the rules. So we're going to do that. I could also add at the bottom band. So let's go ahead and play the price out. Again, 1 unit of risk. I'm not over risking anything. And I'll take the hard take profit level if price reaches my TP. There it is. So now I got what? 1.6 for the day, 1.6R for the day, just by playing this out. And it happens over and over and over and over. I can't tell you how many times it happens. But the point that and the reason why I'm showing you this is like, and I do it live Monday through Friday. I got a crew, and these guys are amazing, and they're taking their trading serious, and they want to see what we're doing. So I'm showing them. And I will just tell you this. I've studied ICT. I've studied SMC. You can walk through here and tell me why I'm stupid and all this stuff. But guess what? I just keep winning. All right. And you can keep talking and saying that, why would you take it in the middle of an FBG, inverted IFBG, whatever. I don't care about your acronyms, bro. I know. I literally have a term sheet inside of our group with all the acronyms, right? ICT, ABCD, EFG. What is a breaker block? What is a market structure shift? What is, you name it, we got it. But does it make you better? Does it make you better? Answer that question, man. I'm so passionate about this because I just want people to wake up and say, you will never figure out this chart. So you need a strategy that combines money management, right, with common freaking sense, all right? And the way that different markets move also, I think it's important to understand. So like if you tried this strategy on Euro USD with the New York session, you're most likely going to get chopped up. It doesn't really work. If you try this strategy with gold, most likely it's not going to work. So different strategies are for different market types. So I trade the Nasdaq and the ES because it works with those market types, right? And you can sit here and say, okay, you're not even looking at SMT. You're not even looking at, higher time frame order flow, like footprint charts. You want to get real deep? Let's go. Let's talk about the order book, right? None of it really mattered because I put together the strategy, right? And I started to notice that momentum in trading, basically order flow, is really all that matters. You get that right. Like a lot of guys will call this your daily bias. If you get the daily bias correct, you're going to win, right? If your daily bias is wrong, most of the time you're going to lose. I don't care what your strategy is, you're going to lose, right? So look, here it is. I'm going to do one more day just to show you like it's not an anomaly. It's just like you go and backtest this. You can see all the backtesting videos that I have in the community in my free group. You can see the backtesting video that I have in there, and I walk through a ton of setups, and I do it live. I did 4 backtesting sessions in a row, 4 weekends in a row, 2 hours each, clicking the rando button, people looking over my shoulder like it's just doing exactly what I'm doing here. So what are we waiting for? We're waiting for the break of the 5-minute candle break, right? So there it is. And look, if you know about premium and discount, what am I taking a trade in? Premium. It's like, I had this video a long time ago. I said, Jim Rogers says, buy low, sell high, right? The problem is knowing, where price is going to go, like when to take your profit, basically. Well, there's another saying, and I don't know who says this, but it's buy high, sell higher. And that's a momentum mentality, right? That's more of a breakout trader mentality. So check it out. Let's go ahead and do this. We're using dynamic money management on this trade. So the stop loss is going to equal 1% of my account. I hope that makes sense. I really hope that makes sense. So look, we're going to hold. We reach the top. So I could just take this at 1%, right? I could just take the win and go play golf, which I do all the time. So it's not about holding until sometimes I take it. If it's like, if price is kind of like already made the move, in my opinion, and this is subjective, then I'll just take it. If maybe on a higher time frame, we do have a previous weekly high or a monthly high or a daily high or a session high, maybe I'll take it, right? Those are your discrepancies. And that's why if we both, you and I, whoever's listening to this, have the same entry model, we're going to have different P&Ls. One of us might not even be profitable. Well, how's that possible? How are you profitable, but I'm not? It's because of risk and trade management. Those are the only two things that matter. So in this case, we're going to trail price. So I would break out the break even stop right here. I put it right about there. Let's see if we can push higher. Okay, I'm probably going to push this a little bit higher. I'm using the shelf method. If you don't know this method, I teach it in my community. It looks like it grabbed me right there. So we'll go ahead and just call that what it is. It's a 0.59 trade. So I took a 1%, turned it into a 0.59. That's fine because I'm looking to trade with what we call dynamic take profit levels. This is where you're trailing price, right? And look, we get another entry model now because we pushed, and this is something I teach. I'm showing you a little bit more than what I normally would, guys, but this is 218 point push. And because of how we pushed, we would know to not probably, this is going to be a little bit riskier to take a trade right now in the middle of the band because that's not equilibrium. Equilibrium is right around here, somewhere around this level right here. And so we're going to wait for price to pull back to an equilibrium level before like adding, right? So, or taking another trade, excuse me. Okay, so she pulls down pretty much in that zone, goes back up. I'm not really interested in taking a trade this late in the day. Plus, we're kind of rolling over. I get a red line. This is showing me, hey, don't take the trade. Like, just stupid stuff. That's like newbie stuff. Like, it's a red line. Don't take a trade. It's a blue line. You can take a trade. How ridiculous is that, right? But this is why we have new people joining our crew and like smashing in your face win after win, day after day after day. It's crazy. Should we do one more day? Maybe I'll do one more day. How much time is this video? 18 minutes? Oh, good Lord. I told myself 10-minute video. All right, so we'll go one more day. That's fine. We'll do one more day. I'll show you this one more time and let's see if we can't, hopefully we get a runner, but because runners happen like once a week. You're going to get a runner. It's insane. Let's go ahead and smash the like button while we're at it. Smash the like, smash the subscribe button. Haven't said that in a video in a while. Okay, so this is the 15-minute range. We got one more candle for the 15-minute range to produce. There it is. Cool. So look at the momentum, right? So we got the 6 candle rule. This is showing us good momentum to the upside. Everything looks good, right? 6 candle rule. I got a little indicator for our crew to help spot 6 candles, and it's how these candles look. This is spotting momentum. I think momentum is more important than structure. I think it's more important than liquidity. I think liquidity is what makes price move, but momentum is what, that's going to kind of determine whether or not you're going to continue through previous daily high, previous daily low, all those liquidity levels that you're taught, right, when you first start trading, or you're going to reverse. Like momentum is the key. So anyways, all right, we're waiting for a 5-minute candle to break. We break, we're going to go long. Very simply said, dynamic money management. We have good momentum to the upside. My daily bias is long. I call it a temporary daily bias. Damn, I talk fast. How about 50, 20? I feel like I'm talking a million miles an hour. Anyways, so for this trade, bam, see that spike up right there? This spike up, right? Most likely, if I'm seeing this in real time, most likely I'm just going to set a break even stop pretty fast and see if I can trail. So let's see what happens. I got our break even stop. Okay, there's consolidation. This is where I would be pushing into that consolidation. Our shelf is right here. That's crazy. We might get a runner. So now price is pushing. I'm waiting for her to retest the shelf before I trail tighter. Now she's pulling away. So now I just want to trail. We're losing momentum. I'm going to trail tight behind a wick. Here we go. Previous candle wick. All right. Losing steam. You can see it in the candle, right? So we're losing steam. Most likely we're going to come back down. I'm going to go a little bit tighter, squeeze a little bit more out of the trade. Okay. We don't. We keep going. Let's go. All right. Right behind that wick. Once again, just using the shelf method. This is all about getting the biggest amount of juice out of the squeeze, I should say, right? So 3.41%. I don't know what to tell you. This works. It has nothing to do with anything other than what I showed you in this video. If you want to learn more, join the group and, join our live calls and we'll see you in there. When you get in here to the free community, you go to the calendar and you join one of these calls. It's happening, 3 times a week. I think we're going to even bump it up to 4 or 5. So come in, say hi. Let me know what you think. If this helped, at least know that there's something else out there at the very least. Like I know a lot of guys talk about their winnings and stuff. I do it live Monday through Friday. I would not have a community if I lied, if I was on here saying that I did something I didn't do. So I'm just telling you, this is what we're doing. And I'm trying to keep it simple. Like I said, I don't know if knowing everything out there in trading actually makes you better. What moves the needle? See you in the next one.